Good morning, everyone. Welcome to the On Time, On Target Morning Brief for Invest with Fighter Pilot Precision on a daily basis. Today, we're going to talk about the banks. Bank earnings have been going on this week. We had Bank of America this morning, Morgan Stanley this morning as well. We also had JP Morgan earlier in the week. So all of those have all of the banks have beat their earnings in earning expectations, and they've guided up. And overall, I think it's a very attractive place to go ahead and look at investing here. I think that JP Morgan is the best of breed. But I would say there isn't a value play in the other three. And by the other three, I mean the two I mentioned with Bank of America, Morgan Stanley, as well as Wells Fargo. Wells Fargo is a little bit difficult. So many people were upset with what they did with pushing accounts on you. It's kind of been years now, but the hangover from those sorts of things can be pretty significant. So a lot of bad blood out there, but that one is obviously the cheapest of them because of the bad blood. Whether you want to invest in it or not is up to you. I tend to stay with best of breed in JP Morgan, but certainly Bank of America, you could make a good value case for, and then Wells Fargo is obviously the cheapest of the bunch. If you want to invest in all of them, there are avenues to do that through index funds. One of them is called the XLF, which is the Spider Sector Financial Fund that a lot of people really like. I do have some of that in the book. Not personally, I prefer JP Morgan myself. But before we get too far, if you didn't catch the news last night, the COLA for 2022 was announced, 5.9%. Of a cost of living increase there. Remember, that's based off of the CPIW, which is the wage inflation, which is pretty much the lagging indicator of all of the CPI series. But yeah, 5.9%, biggest pop we've had in 40 years. So pretty significant out there for those that are already collecting Social Security. That obviously starts January 1st. For your increase. Also, if you happen to be on a pension that's indexed to this, like I am with the military retirement, is also, 5.9%. And the crazy part about that is, once you get a big move like that, then, that's there forever. So, expecting inflation to average at 2% over the long term, you get this big jump up. Well, then again, the further increases of 2% or even that much more because we had this big jump. So we'll see. But yes, so that's what we have for today's show. As far as the topic, we'll talk about earnings reports. There's three things that go into each earnings report, and I will break those down for you. And then for our day trading stuff, I don't really like any of these. I have two longs. I have Sterling Construction, got a new aviation project in Utah, that nice big contract. They're going higher. Another long in DK, which is Delec Holding. I have not heard of these guys, but they're up on an upgrade to a buy from neutral. So it's kind of a double upgrade. You'll see their chart here in a second. And then our short is Domino's Pizza. They released earnings and they beat earnings, but their same store year over year sales are decreased, which almost makes sense, right? Because everybody was, if you think back a year ago, we were pretty well stuck in our houses for the most part. We're not out and about like we are now, that a large portion of the population has been vaccinated. But so that, the stock's getting hit pretty significantly. I don't know that that's really enough to be able to take it short, but we'll certainly watch it here at the open. All right. If you're catching us on replay, make sure you subscribe and hit the notifications bell. If you want to join us live, it's $25 in the room. And with that, let's go ahead and get started. All right, here's our lineup card for today. Standard disclaimer applies as a financial education presentation. You have to do your own due diligence for acting upon anything you hear in the briefing this morning. And full disclaimer information is available at ototnow.com. All right, welcome to Thursday already, October 14th, crazy week. If you did not file your taxes on time this year, you have until tomorrow to wrap that up. I have a few things I need to take care of yet to get those officially filed. So make sure that's in your cross check. Our mission objectives today: grow our money, protect our money, and live off our money. Primarily talking to about growing your money with the investing through banks. When you think of, you think of the long-term names that have been around for 100 years, that's been a pretty good place to have money, especially in inflationary. If you think inflation is going to continue to be an issue, banks are a pretty good place to have money because they can turn around and capitalize on that through lending at a higher rate, so it doesn't really affect their profitability. But they're also pretty stable, except for the global financial crisis in 2007 through 2009. But the analogy I use is, again, like 9/11. Once 9/11 happened, 20 years later, we still have, the same mechanisms in place to prevent it from happening again, even though terrorists will probably try something else. Same thing when you think about the global financial crisis. Many of the bank balance sheets were, all these rules went into place and were put into place to protect us from this happening again. And that has happened. I mean, the banks are, I'm convinced they are completely strong. We have the big Evergrande issue over in China, and it freaked out the markets for a couple of days, but really everybody took a breath and went, no, actually the banks are pretty stable. They have, they're required to keep a significant amount of reserves on hand. So really a big default out there isn't going to affect us like it did back in 2007 to 2009, where once you started down that road, it cascaded into successive defaults, which, we're set up for that to not happen again. Also, I moved into the credit market lately, which is something I, would not think I would have done. However, having studied it more and becoming an expert on it, I have no problem putting money to work in that space, generating that around 8% return. And I'm not worried about all the things I was worried about coming out of 2007 and 2009. So I've taken a look at it. I have my money in it. I'm putting client money in it. And I don't see any concerns there. All right. The long-term investments we'll take a look at: JP Morgan, Bank of America, Morgan Stanley, Wells Fargo, and the XLF, and then contingencies are standard. All right, let's go ahead and go over to TD Ameritrade real quick, look at the longer-term market. So here's where we are long-term, still hanging in there in these uptrends. We have to be getting close to getting a downtrend line here, but the futures are up 1% today. Everybody's happy. I think it's a cost of living adjustment, and the banks crushing earnings, I think, are really taking things higher. I did read up on the Let's Go Brandon thing. I find so I got sent so many things about this Let's Go Brandon meme that's happening out there. It's a pretty funny story. If you don't know it, I'm not going to repeat it here, but check it out. It's pretty priceless. I can see why everybody's laughing so hard now. But back to the market. So we're, over a month really of down days, but now we have a nice big green day. So it may help us keep in the uptrend there. All right, here's the day trading charts. We'll be back to those in just a second. Let's go over and take a look at these futures I just talked about. Refresh them here. So there you go. Over 1% in the NASDAQ, which is nice because tech has been hit pretty hard lately, and then almost 1% in the Dow and the S&P. So yesterday was a mixed market. Dow was down, S&P and NASDAQ were up, but the overall pretty strong start to the day. All right, you have Europe up over 1% for the most part. You have Asia split, bonds 1.53, so kind of backing off of the straight up move the 10-year had been making. Remember, it was closer to 1.6. They're just talking about Domino's Pizza down there. If you can see the screen there on CNBC. As far as oil, back above 80, again outside the range here. So I was asked about oil stocks the other day. They can look attractive, right? Because they made a move up higher already. Well, it's the move higher where you make most of the money. Now it's kind of do you fade these things? If you buy it for the dividend, just buy it and hold it. I don't have any real problem with that, but you're really holding for the long term if that's your plan. I wouldn't say they're necessarily attractive to make any money right now, more of a preserving money, if you will. So I'm not personally in them. I'm not pushing. All right, gold and silver higher, and then crypto must be higher because I saw Ethereum was up significantly. So around 3,700, pretty big move there in Ethereum, and ETHE is up over 5% this morning. morning as well. All right, let's go over to TD Ameritrade and we will set up for, get this shared out correctly. All right, we'll get set up for the market open. I'll be right back with you. Good morning, everyone. Welcome to the on time, on target play of the day. We have 5 seconds to the market open here on a Thursday, October 14th. You have 4 screens in front of you. Here's the opening bell. All right, these are all 1 minute charts. You can see the big move up in the futures. So I'm liking the longs based off of the move up here. A lot of positivity going into the open. We have 2 longs for you. STRL is Sterling Construction with a nice new contract, even though it did just drop there and it's not gapping up right now. And the next one is DK, which is the Delec Holdings. Again, a little bit low on the volume. It does not look like it's open yet. That was gapping up earlier as well, almost 5% on an upgrade. Our one short out there, which I don't really like for the story too much, it's actually back out a little bit there. So you see that this is the earnings down here at the bottom. So $3.24. Get rid of my arrow there. Stop it. $3.24. It's in the green. So it was earnings. They're making money, not losing money. I'd be in red if they're losing money. You saw it gap all the way down, but then they've had their conference call. It was the year over year same store sales that were causing the concern. I think that kind of makes sense coming out of COVID. All right, so looking back to our 2 longs, STRL is not really moving, and Delec Holdings here doesn't really have enough volume to take it long. So I am not going to spend much more time on looking at things for day trading. I don't think, even though DPZ is set up in accordance with our parameters, well, almost 5%, I still don't think it's strong enough to short. If you're going to sit and watch it, if you see the market roll over red, meaning we go from 1% up to around 0.5%. So, a significant sell-off, you didn't have to necessarily be completely red. Then you could turn around and take this Domino's Pizza short because the overall market's going to trend down. But so far, I'm not really seeing any signs of that. All right, let's look at how everything in the big picture is doing. So we talked about ETHE there just a few minutes ago. That's Ethereum. That's the Grayscale trust that holds it. That's up significantly. Bank of America up 3% on their earnings. DXC is up. That's another name that it's a spinoff of. They would say it's not a spinoff. A bunch of folks left from Arthur Andersen, turned Accenture, now left to go to DXC. This name has been kind of beaten up for a while, so you can kind of see went all the way down here to 10, and then basically straight line up to 40, and then now you can see it's back in 30, low 30s or so. So I also find DXC attractive here. I do own some of it personally as well as in the book. All right, CRPT, same way. That's an index crypto fund. I own that personally and in the book as well. Mind Medicine, MNMD, did a special on that not too long ago. It's been nothing but losing money. So I have to relook at that. Nice to see it in the green today. All right, let's see what's in the red. And very few names. Look at that. What 8 names in the red. Our 2 bond funds, of course, when the market's up 1%, bond funds are going to be off 0.02%, which is next to nothing. But they are off a little bit. And then we have Alibaba, K-Web, so Chinese names, American Outdoor, and then NEO, another Chinese name. So for the most part, you can say almost everything is in the green today, again, led by the Ethereum holding. All right, let's go back over to CNBC.com, and I'll close out by talking about earnings reports. So when you talk about the earnings report, the earnings itself is backward looking, meaning it is a report card of how did you do in the past quarter. So when you think of earnings releases that are coming out here in October, that means these companies closed out quarter 3, they're presenting those. And it's very much of a how did we do, but you can't change the past. So really the important part, you look at the top line, which is revenue, and then the bottom line, which is profit. Again, those are coming out of the financials, and those are rear facing. But what people really care about in investing is what's forward facing, right? And that is the outlook. And that is what do we project our earnings to be for the next quarter, the next 4 quarters. And then that's when you hear the term called guiding up or guiding down. So say it's a tech firm that thought they were going to make 10% a quarter for the next 4 quarters. Well, if they change that to 9% a quarter, even though 9% quarterly, I mean, that's great growth rate. It's down from what they had projected. So therefore it's considered a negative. So they're guiding down. It doesn't mean they're losing money. It just means they're guiding down from what they had previously projected. So what you will kind of see is kind of like markets. We talk about taking the stairwell up and the elevator down. When companies guide down, they tend to over guide down. Facebook was notorious for this. They would beat earnings for 14 quarters in a row. And then when they knew they weren't going to beat earnings, they would guide down so low and the stock would just get hammered. But they took their guidance so low that they now could increase it again for another couple of years. So a little bit of gamesmanship that can happen there. It's kind of obvious when somebody's doing it and they get called out on it, but not in the mainstream media, right? You'd have to kind of dig into the financial sites to know when somebody's doing that. But I'm not saying the earnings reports are completely irrelevant. They're not, but they're certainly they can be gamed, if you will. In the investing world, you have, a review like I did the other night for our company is, again, looking at what we did in the past, but more importantly is what are we looking at for the quarter coming up. And then, of course, that's the report card we'll hold ourselves to in January when I have to go back over and how did ask and present how did these themes perform in Q4 that I thought were poised to outperform, right? So same thing, a little bit different because we don't dig into the financials here with my firm because I don't have to. But talking about the investments, again, looking forward is far more important than looking past. All right, that's all I've got for you today. Thank you so much for checking in, and we will talk to you guys tomorrow morning. Bye.